Hello, everybody. Welcome to Thursday. The S&P 500 was up 1.3% today. We don't have any changes on our signals. Still two greens for stock and a yellow and a green for our bonds. Today's market was propelled by really good news. The inflation report from wholesale inflation, it's called PPI, Producer Price Index, was down 0.5% month over month. That was a lot better than expected. Inflation continues to move to the downside fairly consistently, maybe a little bit slower than it should, although that wholesale inflation number was really good today. But we did peak out on inflation back in June on the CPI report. And we've seen things come down. Things are going in the right direction there. We also got a report on the first time unemployment claims, which was higher than expected. More people filing for unemployment is a bad thing, but in an inflationary environment, the stock market sees that as a good thing because we've had the number of job openings come down. We now have a bit more unemployment filing and such too. With the job market softening up, takes some of the pressure off of wage increases, which is one of the things the Federal Reserve is going to look at. So these are all data points that the Fed's going to be concerned with. We're hoping here that they can see this clearly and continue to maybe not raise rates as much. Maybe we get one more rate increase and then they stop and what have you too. So the market's kind of looking forward to that. The fear, of course, is that they overraise rate and something falls off. And an awful lot of articles out there talking about all the potential negative things that can happen. The banking crisis creates tighter credit, which creates a big problem for the economy and the stock market, or earnings are going to have problem because of inflation, and we're going to see a big drop down in the stock market because of those earnings. Now, keep in mind that the market has been going up since October, and we continue to kind of challenge into good territory here with moves like what we've had today. So we kind of have to assume, looking at what's going on here, that the competing forces are equaling each other out. So the concept of higher inflation, which is starting to come down, and higher interest rates, which may slow down, and the possibility of big recession and earnings issues, combined with kind of this pent up demand that's coming out, and we're finding this middle ground, and we have been for quite some time. These negative articles that are out there now were out there 6 months ago, we're out there a year ago, we're still doing okay. So we'll see how this plays out. So we'll have to be careful and watch for what's going on, and we are certainly have some very good triggers to try to get out of the way if things do get in trouble, and I think that's wise in this environment. But right now things are going well, and today was a really good day. So if you want to join me tomorrow, I do my Talk Money with Tom show from 12:15 to 1 o'clock on YouTube. It's live. You can send in questions. I do a summary at the beginning of the show to kind of talk about what I saw happening for the week, and then you can ask questions about anything from asset management, the markets, retirement planning, tax planning, those types of things. So feel free to join me. I look forward to seeing you then. Thank you very much.